One word to describe the Toronto and GTA real estate market in March 2026: tricky. Some people will say that the market is in its very early stages of recovery, which does make sense. Both new and active listings were down by pretty noticeable amounts relative to the same time period last year. And while that was happening, sales for the month also increased very slightly on a year-over-year basis. The new listings category has dropped by a number in the teens in every single month this year, which is why some people are saying that we are now in that recovery phase. They dropped by 13% in January 2026, almost 18% in February, and now by almost 17% for March 2026. Again, when we see less inventory coming to the market mixed with a drop in active listings and an uptick in home sales, even though this month's number was still well below the average for March data, you can make the case that things are turning. I also want to be clear that just because this is happening doesn't mean that prices are bouncing back anytime soon. Again, this always depends on location and property type. There were some homes that have offer dates with a high volume of bids being submitted, but if you're looking at a condo or a freehold home type outside Toronto proper, then you can steer negotiations as a purchaser, which then means that if you're the one selling, conditions are still going to be pretty soft for the most part. My name is Trey, and I'm a realtor here in the city of Toronto and the GTA who loves helping amazing people just like you navigate the real estate market here, whether you're buying, selling, or renting. If you would like to see how we may be able to work together, please feel free to schedule a call with me by using that first link down below. Getting started with our property breakdowns, when we look at detached properties in the city of Toronto, these performed slightly better month over month and represented about 30% of all sales transactions for the month of March 2026 in the city of Toronto, coming in with an average selling price of $1.623 million, which is up 2.84% month over month, but down 6.5% year over year. There were roughly 570 detached transactions that took place in March 2026, which again is up very slightly by 1.4% compared to the same time period last year. These properties took anywhere from 2 to 3 weeks to sell and achieved 101% of their list price on average. Again, this just goes to show that when expectations are actually set from the get-go and the seller and the realtor are aligned, detached properties will move fairly quickly and for decent numbers. The most active price points were between 1 million and 1.5 million, with a consistent number of transactions also occurring in the $2 to $3 million range when looking at the Habistat and Treb numbers. Moving into the semi-detached category, these came in with an average selling price of $1.248 million and accounted for 9% of sales in the city of Toronto. There were roughly 178 semi-detached homes sold in March 2026, and these took anywhere from 9 to 18 days to sell while achieving 106% of their list price on average. This is still clearly a very competitive asset class, especially in areas close to downtown Toronto, such as Leslieville, the Beaches, and Bloor West Village, for example. If you're searching in these areas, you can expect for there to be a bidding war with a high number of offers on each property. But as I said before, if you're outside Toronto proper or these very competitive locations, then you can still drive the bus as a buyer. This property type was actually impacted one of the most compared to all the other asset classes, with prices being down roughly 8% year over year and were basically unchanged from a month prior this year. Activity was strongest in the $1 million to $1.5 million price range. Taking a look at the townhouse category now, Treb combines condo townhouses and freehold townhouses in their reporting, so we will do the same here. This segment accounted for roughly 10% of transactions in March 2026 for the city of Toronto, with a total of 200 units sold and an average sale price of $958,000, which is down about 2%, both month over month and year over year. These properties fell somewhere in the middle in terms of pace, taking between 22 days and 34 days to sell, and were the most active in the $700,000 to $799,000 range. Finally, moving into the condo segment, these accounted for nearly 48% of all transactions, which is very typical, with 920 sales recorded for the month of March 2026. The average sale price was $642.5K, down just 2.36% month over month, but a more noticeable 10% year over year. The most activity occurred between the $400,000 and $600,000 range, and a healthy number of transactions extending up to $700,000. These properties took slightly longer to sell as well, averaging 27 to 38 days on market, and sold below asking, achieving just 97% of their list price on average. This segment is heavily driven by first-time home buyers who are more willing to maybe test the market with lower offers. From what I'm seeing, many sellers are not taking these offers personally like they would have before as well, and are open to actually working with buyers when there is a realistic path to getting a deal done. Months of inventory, otherwise known as the inventory rate, also dropped for all home types across the board, with the exception of semi-detached properties, but this asset class is always in a seller's market for the city of Toronto. They were there all 12 months last year, and we'll cover them right now. In March 2026, detached properties sat in a seller's market with 3.52 months of inventory, coming from a more balanced market a month ago. Semi-detached units are, of course, in a seller's market again, as I just said, with 2.42 months of inventory. Townhouses are also in a seller's market with 3.73 months of inventory, becoming a little tighter than last month, and condos are actually in balanced market territory for the city of Toronto with 5.16 months of inventory. Last year, the condo segment was in a buyer's market every single month, with the exception of 2 months near the end of the year. This year, we can see that things are slightly different, and a big factor is affordability improving and prices are coming down, giving that buyer more confidence to make the move. Yes, fixed mortgage rates in Canada have risen quite significantly since the start of 2026, driven by higher bond yields due to inflation risks and geopolitical tensions, as I know that everybody sees on the news every single day, which kind of combats that affordability piece. As of early April 2026, many lenders actually hiked rates by 30 to 40 basis points, which again rolls things back a little bit. But like I said, prices are also coming down a meaningful amount, which is pushing people off the sidelines. All of my buyers personally this year realized that they wanted to take advantage of where the market was at, and were just done with renting. Yes, you have more flexibility in some ways when you rent, but in other ways you don't. You are at the mercy of your landlord saying that they want to sell because they need to move in, or a family member needs to move in, which then makes you have to pick up shop and move into a new rental. And on top of this, the rental market also has some markets that you hear me talk about so frequently when discussing the buying and selling market. I've had 2 instances this year where I was helping tenants, and places have rented for $150 to $200 more per month than when they were last rented in 2024, despite average rental rates being down 5.5% and 6% since then. If you want a huge rental discount, go rent in one of the brand new buildings where 38 480 square foot units are coming to the market all at the same time, because that's where the discounts are. Same as buying. Good floor plans with good square footage in nice buildings or areas, and with parking included, will always have competition in the city of Toronto. I hope you enjoyed today's video and found value with the information shared. We will see you in the next one.